story about the dude talking about 401k
Yeah.
and life insurance. And something that I preach a lot is like, we don't want to focus on the name of these investment products. We want to focus on the benefits and the features of them.
Right.
Because there is no best investment. There are investments that do well, but they have cons to them. So in your portfolio of things, we want this investment here that has this great benefit to outweigh the cons of the one that you have over here, and they balance out. So like, for example, people talk about how a 401k is going to be taxable at retirement, which it is, right? And we don't know what rates are going to be during that time period. But if you're dealing with somebody like myself and we're putting together a full-fledged game plan, there's a way for you to take retirement income out without paying any taxes. So let's just go through the gambit of things you can pull from. We'll talk about Social Security, your 401k, investments you have in the market that will be subject to capital gains, right? Roth, and then life insurance, and how they all play together. You can pull up to about $32,000 of your Social Security benefit without it being taxed. So the first $32,000 that we will pull or have coming in is from that. We wouldn't want to take more. The next is dealing with the standard deduction. And so right now, the standard deduction is at $14,600 for 2024.
But they're married.
Also, it'd be around 28. So we would take $28,000 from the 401k because then we're not crossing the standard deduction amount. The next place is pulling money from your investment account. If you're married, there is no capital gains tax if you're not making more than $94,000. So even though we pulled this money out, it's not seen as income because of the deduction that's been carried already. So we pull another $94,000 on top of the 28 and the 32. And the Roth and the life insurance, it doesn't matter how much you pull from them because they're tax-free. So if you have these different things, it not only allows you to pull this money out without taxes, but also if we run into a situation where we have a recession, you can't just say, oh, I'm not working anymore, I'm not gonna pull money from my 401k or my investments. How are you gonna live? So what the life insurance allows you to do is to pull money out from something that's not correlated from the market in the meantime until your portfolio bounces back to where it's supposed to be. So that's what I'm getting to when I'm saying the pros and cons of these different investments should balance each other out and allow you to have a sustainable lifetime. Because if you get into retirement and the only thing you have is 401k, Roth, investments in the market, and we have a 2008, it'll take you 4 years to run out of the money that you built up.